The Centuria Agriculture Fund is an open-ended unlisted property fund that aims to provide investors with stable income returns and the potential for capital growth by investing in a diversified agricultural property portfolio. Our speaker tonight is Centuria's Agriculture Fund Manager, Mr. Kelvin McKeown. Having grown up on multi-generational family sheep farm in New Zealand, Kelvin has been involved in agriculture his entire life with a broad and sound knowledge born from practical experience. Prior to Centuria, Kelvin worked at Macquarie Groups for 14 years, managing unlisted agriculture funds that owned and operated large-scale horticulture, viticulture, and forestry assets. Kelvin's topic tonight is agriculture investment fundamentals. Why invest in controlled environment agriculture? Welcome you, Kelvin.
Thank you, Angelina. And thank you for that lovely introduction. Well, as Angelina said, my name's Kelvin McKeown. I'm the Agriculture Fund Manager here at Centuria. For those of you who don't know Centuria, we are one of Australia's leading property fund managers. We're listed on the ASX 200. We have approximately 21 billion of funds under management. Over the last 3 years or so, we've been investing in the agriculture space. Over that time, we've developed 3 different agricultural property funds with approximately $500 million of assets under management. Got quite a diverse range of assets from stone fruit orchards to citrus orchards, from almond orchards to vineyards, from tomatoes grown under centre pivot irrigation through to market vegetables and fruit and vegetables. And then more recently, we've been acquiring glasshouses, which brings me to the fund I'm going to talk about today, the Centuria Agriculture Fund. So this fund launched in July last year, so we've been operating for approximately. It's an open-ended fund. We're targeting very, very high quality and sustainable agricultural investments. To date, we haven't been taking any operating risk, so we've been buying these assets, leasing them to very, very strong and very, very experienced tenants, and mainly through triple net leases, so very, very, very long triple net leases. The agriculture sector that we've been targeting at the moment is what we call protective cropping. Protective cropping is a vast array of different agricultural assets, from blueberries grown under hail nets to strawberries growing in polytunnels to mushrooms grown in sheds, or tomatoes grown in glasshouses, which is the very, very, very top of the protected cropping sector. And we always say, if you're going to start anywhere, you might as well start at the top, and that's what we've done. So the last 12 months, we've managed to purchase 3 very, very large-scale glasshouses within Australia. The fund is now the largest owner of glasshouses in Australasia, with around 73.5 hectares under glass. And the assets under management for the fund now total around 323 million after 12 months. So it's an achievement that we're very, very, very proud of. So why ag? Why Australian ag? Well, the underlying thematic always comes back to demand, and it's the demand that's increasing, and it's increasing from the growing middle class, the growing global middle class. So the middle class population is expected to increase from around 3.8 billion today to around 5.4 billion by 2030. So it's a huge increase in mouths to feed. These are people that are going to want to eat more food, a much larger variety of food, much more high quality food, and safer food. And that's very, very, very important. The majority of this growth is going to come from the Asian markets. So Australian farmers have a very, very large competitive advantage with their proximity to those markets. We also have another huge advantage over here because we're globally known as very, very good farmers, and that can produce a very, very large variety of food and very high quality food. And the most key factor is a safe food. But your typical Australian farmer, they operate in an environment of climatic extremes. And as we've seen more recently, the natural disasters in this country seem to be more frequent and more intense as a result of climate change. And this is one of the reasons that we've identified protective cropping as a good agricultural sector to get into. So you're able to mitigate all your climate risks, so your droughts, your frosts, your floods, your fires, and then also your pest and disease risks. Because you're able to grow your produce within a controlled environment, you're able to significantly increase your productivity while significantly reducing the amount of inputs that you require. You're also able to produce all year round. So some of the crops you can only produce in winter, in summer, and can't produce in winter. Where under a glass house in that controlled environment, you can produce all year round, and you can produce a consistent quantity and a consistent quality. Now, this is what the end consumer wants. By doing that, you're able to strengthen the financial security of your tenant. So we know that they're going to have less risk of crop failure due to the climatic conditions. So we know that they're going to be strong and they're going to be able to sell their produce all year round. And that's the sort of tenants that we want. On to the sustainability piece and the ESG piece. It's all about the production piece as well for glasshouse production or protective cropping production. So a lot of people use ESG as a marketing tool. We've got hard facts to back up the benefits of growing within a glasshouse. And what we'd like to do is compare ourselves to growing tomatoes out in the field. So if you're growing tomatoes in the field, you'd expect to produce somewhere around 69 tonnes per hectare. When in a glasshouse, you produce 800 tonnes per hectare. So it's a really, really significant increase in production. With water usage, which is such an important resource in this country, you expect to use around 116 litres of water to grow 1 kg of tomatoes out in the field, where in a glasshouse, you only need 22 litres of water. The reason that there's such a less requirement of water within a glasshouse is that in the environment, you're able to recirculate, recycle, and sterilize that water so it keeps getting reused and run back through the system. There's other benefits as well. When growing out in the field, you expect that your wastage is going to be somewhere, and it can be up to 30%. Where in a glasshouse, it's less than 5%. It's also much less reliant on fertilizer and your pesticides because you can control that environment. And if you do have an outbreak of bad bugs or bad insects within a glasshouse, very simply, you introduce good bugs to fight the bad bugs. So moving on to one of the 3 assets that we recently purchased. This is the Sundrop facility that's located in Port Augusta in South Australia. We purchased this asset in December last year. So Port Augusta ticks one of the boxes that's really, really important for glass houses, and that's sunlight hours. Port Augusta is pretty much in the desert, so a huge amount of sunlight hours. More sunlight hours, the more production within a glass house. The only thing that's really letting this site down, though, is its access to water. Annual rainfall in Port Augusta is around 200 mils a year, so it doesn't have very, very strong access to fresh water. To solve for this facility has a pipe that connects it to 5-kilometre pipe that connects it to the Spencer Gulf. And it sucks salt water out of the Spencer Gulf, and it uses it for a number of different reasons. The first of all is to run through an evaporative cooling system that's attached to the glasshouse. So the salt water is run through this evaporative cooling system, it cools the glasshouse down during the heat of the day, during that because it's in the desert, and that controls that climate. Essentially, you don't want the inside of your glasshouse being above around 28 degrees, or the tomatoes will stop growing. Next, the salt water is run through a desalination plant. The desalination plant is powered by this large solar energy system that you can see on the screen at the moment. So that's 12.5 hectares of mirrors. It's not a solar energy system like we think of on our roof that's generating electricity. It's a solar energy system of mirrors, 24,000 mirrors that are all computerized, and they follow the sun like a sunflower, and they direct and focus all that sun's energy and rays into the top of that pole there. And you can see it at that black point. What that does is it superheats that salt water. It creates steam. That steam spins a turbine. That turbine creates energy. That energy runs a desalination plant. The desalination plant creates fresh water. That fresh water is then used to feed the tomatoes. On top of that, all that hot water is then stored in the tanks at the bottom of that pole. That hot water is then run through a piping system within the glasshouse and heats the glasshouse up during the cold of the night. So it's an incredible piece of technology that combines this natural resource technology and ag technology to grow tomatoes. The facility itself can grow around 17,000 tonnes of tomatoes a year, which is approximately 14% of Australia's truss tomato supply. The facility has a 10-year take-or-pay agreement with Coles, which is a very, very rare agreement. We don't believe that these have been given out in the last sort of 10 years. It supplies Coles with over 90% of its annual truss tomato requirements. So if you're going into a Coles supermarket and buying truss, there's a very, very, very high likelihood that it'll be from this facility. They have a very strong relationship with Coles and Sundrop. Within 48 hours of a tomato being picked in the facility, it'll be on a Coles shelf anywhere in Australia. And they love the state sustainability piece, and you can see that there's a number of sustainability awards that Sundrop have won. That's the end of my presentation. If any of you out there are interested in the investment or want to discuss it more, these are some of the details for our sales team.
Thanks, Kelvin. I do have a question regarding tomato and glasshouse. Very interesting to me. But before we get to that, I do want to ask you a question about the predictability and the risk of your future cash flows. Now, given that your lease structure and the hedging of that provides a level of certainty around the cash flow, the only potential variable perhaps is tenant leaving and not being able to pay the rent. So how do you manage this risk through your due diligence or in the worst case scenario, how would you find a new tenant if an existing tenant just cannot afford the rent?
Yeah, thank you, and it's a very, very good question. When you're looking at facilities like this, it's very different to looking at other property investments such as an office block or a large warehouse. So as part of that DD, we have to do a real deep dive into the production capabilities of the glasshouse, and along with that, what the costs are to run the glasshouse. So we need a really good understanding of what the EBITDA is and what the EBITDA for the last sort of 5 years is, what the risks are to the EBITDA, and what it's looking like for the foreseeable future. From there, we can understand, okay, well, this facility itself is secure. If the tenant was to go under for a reason outside of this glass house, then we'd be able to find another tenant for the glass house because the facility itself isn't able to stand on its own 2 feet. Now, a lot of people might say, well, it's very rare to be able to find these tenants. It might be very difficult to find a new tenant for a glass house because it's such a unique skill set. What we believe is that this is absolutely critical infrastructure for the supply of tomatoes to Australia. So, as I said, that one facility, Sundrop, supplies Coles with up to 90% of its truss tomatoes on an annual basis. So if it went offline for any reason, then that would severely impact the supply of truss tomatoes in Australia. So we think that Coles would be very, very interested in resolving that solution and making sure that tenant continued, or not that tenant, but the facility continued. We also now have 3 of the 5 major glasshouse operators as tenants, and we think that all of them would be very, very competitive and want to get their hands on the glasshouse to increase their production if one of them was to come offline.
Thanks, Kelvin. Now, here's my question about the tomato. assuming Australians and the growing middle class of Asian countries continue to eat meat, assume glasshouses will become really prevalent and spoke out to very popular. Are you interested in acquiring more assets, and are you potentially looking to work with distribute any new glasshouses? Either of these two approaches be accretive to the fund, and why not?
Yeah, no, very good question again, Angelina. So we currently in Australia, there's around 215 hectares of commercial scale glass houses. We now own 73.5 hectares of that 215. We think there's maybe a couple more glass houses that we might be able to acquire before we run out of existing glass houses. And then from there, we're definitely always looking at development projects. So the Sundrop facility, as an example, it was built. It's currently a 20 hectare glass house. It was built with the idea of it being a 30 hectare glass house. So you can quite simply build another 10 hectares and plug it into that existing infrastructure. So it's significant cost saving from starting from scratch. And also all the major supermarkets are speaking with us about, okay, well, what sort of crops can we grow in glass houses, and how can we increase the supply? The major supermarkets really love produce that's grown in the glass house because it's that consistent quantity, consistent quality, and the production's all year round.
Well, thank you, Kelvin. It's a great presentation. Thanks for the Q&A. It's good to see you. Take care.
Thank you very much, Angelina.